Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Monday, November 14th, 07:32 a.m. New York time. Good morning. Overnight day trade, overnight scalp. ES futures using options. I was bearish, so I did an advanced option strategy called bear call spreads. Yep. How it worked out? Worked out very well. I got in at 9 to 5 p.m. for premium 115. Put a working order to close of 40%. Got closed at 5:03 a.m. for 0.70. Yep. Very well. It was a winner. Worked out well. Happy camper again. Let's look at the chart. First, looking at the futures, the equity indexes, they're all red. And you can see here, top left, ES, top right, NQ, bottom left, YM, and bottom right, RTY. For you civilians, non-traders, this is the S&P 500. Here at top right, NASDAQ 100, bottom left, Dow 30, bottom right, Russell 2000. Now you know more than your media doesn't want to share with you. Look, they're all trading inside the ranges of Friday. So this was the regular trading hours of Friday. This black vertical line, the gray area is the ended hours trading right now. Yeah, futures are open right now. That's why you see prices moving. They're indecision. They have not taken out their highs or lows of Fridays yet. And also the news is apparently light last night and this morning. Economic news that's expected to be released. Let's go look at my charts of the financial instrument I'm trading. First, look at the daily on the futures. So the ES on the daily chart, we have not taken out the higher low again of the prior day, Friday. There's this huge trading range we had last week. Good chance this will be retested, some part of it. Going here in the 4-hour, where I was looking for the trade idea from the top down. Green area is the demand zone. Top is the supply zone. So last night when we opened here, this 4-hour candle, I'm thinking there's a good chance we'll get a retest down here. Some point of time, this will be retested. Also here, this big green candle had that big red wick up there, rejected the supply zone. And then the red horizontal line, 4,000. We were rejecting it because here, after this rejected and closed here, we had these attempts to follow up higher and higher and reject it. And these were inside candles, indecision. Inside this consolidation area from the top of the trend. Then this red candle. Look at that huge wick on the top, rejection. Here we are right now, this green candle. We'll see how it closes at the end of the day. We might be left with this inside candle at the end of the day. Maybe we won't break out the higher low. But I have alerts set because if we break out to the upside, I have trade ideas already ready. As well as we go further down, I have trade ideas. Let's go look here on the 1-hour time frame. So here in the 1-hour time frame, I took the trade over here this time. Let me draw a vertical line. Put it over at the time I got filled at 9:05. Oops, that'd be 21:05 for you civilians. Yep. So this is hourly candles, and that's where I went bearish, put my bear spread on. You'll see the strikes in it. So again, to the left, when I saw this, we'll zoom in some more. And I'm seeing this rejection of this candle. Saying, yep. So I went bearish here. And even if it doesn't go all the way down here right away, the most important thing was I was hoping it would stay below the supply zone. And it is. It's below the supply zone right now. Let's zoom in some more. You can also see this impulse move when we're lower. So these are potential trade areas throughout the day I have, unless they break and close above or below this supply zone, demand zone. We can have this actually go for another day, another day, another day. Doesn't necessarily mean we have to have a breakout this week. But again, we are inside November. It's a big holiday in the United States coming up. And it has a bird, a big bird, not the yellow one, that includes this holiday. Can you name it? Mention it below. Okay. Let's go look at the 15-minute chart. So last night, when the futures opened, a gap down from the close. Again, we still were inside that range. That gap down of 15-minute candle. Look at that. Had the run up. I'll zoom up. Again, notice these big tills. The tills could be on top. The tills could be on the bottom. To me, when you have long tills, big tills like this one here, happened to be longer on the top, it was a rejection. It did tick out that's high here. Rejected it. So coming into that Sunday night, because this was Friday, I'm thinking, okay, more bearish buys, because Friday, the end of the day, again, that momentum to stay above there Friday did not occur. And we had a big reverse Friday too. So again, leaving more bearish bias. And look at here. Big wick, big wick. So let me mention this. Think about what's occurring substantially when a candlestick forms a wick. You see this wick here, this wick here, this wick here. Rejection of lower or higher prices. This was a higher price, and this was even a higher price, and it rejected it. You know, you have a controversy, or you have a forgot what that word is. You could have anyway. You can have a mindset of a contrarian. It's a divergency. You have a higher highs. That's the word, divergency. Higher highs, but same thing occurring. Rejection, rejection. Yeah, higher highs, and then fill to close above it, rejected it. Higher highs, fill to close above it, rejected it. If I said below, I meant above. So I'll say it again. Higher highs, fill to close above it, rejected it. Then a higher high, fill to close above it, rejection it. Divergency. Something's got to give. Why not be a contrarian up here and trade bearish? So again, 15-minute candles went lower, lower. I got in here, but I used that. I had happened to use the higher time frame to more my bias to get in. And then, like I mentioned, I got out this morning. So the huge impulse move down worked out in my favor. Yep. I'm glad. Good. Now I can start the morning looking for new trades. And let's go back here on the hourly. And you notice the trading ranges, they're small little candles. Let me make sure. There you go. The trading ranges are very small versus primary hours, a lot more whipsaw. One of those reasons is there's less people here at this party. The New York session has the most liquidity, the most volumes, most people participating, because in Europe, it's still their afternoon session. They're still trading, the North American financial institutions. And in the United States, you have the morning people trading. North America, United States, Canada, Mexico, blah, blah, blah. Okay, so you have two continents that are people awake trading this during this time. Here you have the Asian session. Here you have the London session. And then coming into the New York session, like I mentioned, you have so many people participating. Yep. So put this on the 15-minute again, mention this. These wicks, be it on the big ones top or ones down on the bottom. Get rejection price. Look at that wick on the bottom. Lower low, rejected it. Lower low, rejected it. A divergency here, lower low, and rejected it. So become a contrarian and trade bullish. Yeah, if I was awake, I probably would have done bull put spreads here. So incorporate this thought process into your trading. Divergencies, look for divergencies. You had one here, you had one here. Yeah, you don't have to necessarily do it on the intraday. You can do it on higher time frames. Set alerts. You don't need to be there plugged in looking at the screen. That's not good for your eyes for long durations. But these are things I apply when I'm trading. Let's put this back to the, so I can show you my trade setups I took. I mean my, there we go. Zoom out. Again, this gray vertical line, that's why I went short bear call spreads and it got closed here. I'll remove it. So I had to use the options on the S&P 500 overnight. My short strike was 11 delta, got in at 905 and it closed here. Worked out well. So notice these orange horizontal lines. They were the 8 deltas. They haven't got tested yet, but I was more aggressive and went to that higher delta. But again, my duration, I was not looking to stay for a long time. And like I mentioned, I took 40% profits. So this is part of my setups for day trading, scalping. And this is the financial instruments I used overnight, the S&P 500 futures, used options. If I was going to stay closer, more scalping it, yeah, I would do the contract outright. But I was putting this trade on, putting a work order to close and walking away or going to sleep. And that's why I was using the options and it worked out fine. Many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.